Welcome, everybody. It is the week ahead for financial markets with Mike Smith, Head of Client Education and Training and Senior Analyst at Go Markets. To give you some insights into what may move market sentiment this week, and of course, market sentiment, it's not a happy place. But there are five things we've identified that could be relevant. First of all, of course, the markets are in turmoil. We talked about this at the beginning of last week as a potential, of course. Also, at last week's inner circle, now we have further selling. We've lost 10% on the S&P 500 in the last 2 days of last week. And the Nasdaq is now in bear market. We can have a look at a Nasdaq chart. And there you see the drama. And you can see we've even opened up further down this morning. We thought we might find some support at around about this level of 1700, but we've just smashed through that, gapping through it in today's trading already. I just put it on the weekly chart for context, and you can see the drop off. Just over a couple of weeks ago, we hit record highs at 22,226. So this is a drop of now in excess of 25% on the futures contract. So the question is there more to come? Are markets to get any respite from this at all, or we're going to see this continued risk off approach across many asset classes? Of course, it's not just stocks, but anything that is perceived as being risk on is in a difficult place. It doesn't matter what asset class you're looking at. If we look at copper, for example, you can see there, once again, we've opened to the downside in Asia today. If we look at Bitcoin, you can see this is testing lows not hit really since November last year. And if we look at the VIX, of course, you can see 38, put it on the monthly chart, which this is now pandemic levels of anxiety. So more to come, looks likely, certainly in the early part of the week. And most of this you can attribute to tariff turmoil. We're seeing broad-based tariffs being applied internationally from the US, but we are now seeing retaliation. In terms of what happens next, some would say that Trump is using these for negotiating a better deal for the US generally. Unfortunately, it seems to have backfired a little bit. We may see some softening, but at this stage, there's no sign of that. Now we're starting to see, as the US public wakes up to the likelihood of increased costs for goods, then we're seeing protests in the US increase. One of the things that we would expect in market distress is the USD to do okay as a flight to safety. And particularly in light of the Fed's reluctance to cut rates, should again be bullish for the USD. But if we look at the USD very quickly, you can see this is far from the truth. We had a little rally on Friday, but this is on the back of a significant drop that we've seen since the end of December. And again, we're down significantly on this. If we look at this intraday high to where we are now, we're down about 7%, which for the USD is significant. You can see here in context what this means. This is actually a low not seen since September last year already. So why is the US dollar weak? Well, it's quite simple. The markets are starting to price in the potential of a recession in light of the implications of tariffs and not only the US slowdown, but also global slowdown economically. So the markets will be watching data for any signs that that is the case, but it does seem as though anything that plays into that narrative will be responded to fairly significantly. Of course, commodities, as we've already seen from copper, have joined the sell-off party. So we're seeing weakness in copper and base metals generally, in oil, all to do with the potential drop in demand should there be a global slowdown. So it's more than simply institutions moving into cash to potentially take advantage of the opportunities when this drop does stop. We're even seeing gold sell off a little bit, and there might be some profit taken on that for that reason. But generally speaking, again, any data that plays into the global slowdown narrative may mean a continued sell-off in some commodities, particularly base metals and energy. The Fed is in an increasingly interesting place. The markets are pricing in a rate cut in June. But of course, we've got that US CPI number coming out this week on Thursday. It's probably the major data point of the week. If we should see CPI starting to climb, it'll be interesting to see what happens to that potential. We've got two rate cuts priced in for 2025 rather than the four that we had at the end of last year. Already the Fed have made reference to the impact of tariffs and the uncertainty that this is creating. A difficult time for investors, one that is high risk, but one that also offers opportunities. You can get your live market updates on what's happening now every day at 12:30 p.m. We'd love to see you there if you can make it along. And of course, watch for Inner Circle on Wednesday. Got an interesting session this week on a hybrid approach to trading where it's part discretionary, part automated. Want to pop along to if you can make it. And of course, we're always here to help. Our support team are ready to take your calls with whatever you need. And have a great week. Trade safe and see you again soon. Bye bye for now.